Hi traders, Nathan Bray here from ACY Securities. Well, it's time to put these 5 essential lessons that we've learnt about the markets together, because this is what it's all about. It's about learning certain things and then putting it into practice with your strategy. So what we're going to go through is show in the market this week where levels have been identified and how the market traded from there. So we'll look at our entry, we'll look at our risk, we'll look at our risk reward, and we'll start to get our head programmed into a way where we start to see it. Then more importantly, we'll go in and we'll start to predict the future. So we'll look at the current scenario and we'll decide, okay, if price gets to this particular level for the 3 reasons that we're looking for, that's where I'll identify it and look for a trigger, set my risk, set my reward, and let the trade play out. Now remember, not every market's gonna listen to Nathan Bray, all right? It's not gonna do what I say, but what we're doing is being forward projecting, and that we're looking at the chart at the moment and we're identifying where we would like to be a buyer or a seller, and then all we've got to do is sit back and wait. So folks, let's start on the Aussie against the US dollar. Okay, so let's put it all together. We're looking at the Aussie against the US dollar right now, and we can see very clearly that the trend is up. I'm on a daily chart. So it is definitely putting in higher tops and bottoms. So therefore, what I'm looking for is a significant pullback. So I'll draw in my fib tool and I'll go from the most recent bottom area. We'll just go from here all the way up to the top, right? So if the trend is up, and I have no reason to think that that's going to change, what I'm looking for is a pullback to around this 62 fib retracement level here, okay? And guess what? That coincides with a former resistance level on the daily quite nicely. I mean, there were some false breaks even above that, but this is the level I'll be looking at. So I just mark that in, and straight away I could keep my eye on this today, okay? So I'll look at that and say, in line with the trend, a 62 fib retracement level, as well as former resistance potentially acting as support. So I'll just go and shade this area in moving forward, and there it's fixed in and ready to go. So over the coming days or even weeks, if we do get a further pullback and it does test this area, then I'm able to zoom in then on my 15-minute chart and look at whatever trigger I'm going to use to see if that sets up, okay? And then I'm in a position to isolate that level. So that's the Aussie US. Let's go have a look at the Aussie Yen. Surprise, surprise, we've got something pretty similar happening. So let's just say the trend is definitely up. So we'll go down to this most recent bottom level here and go all the way to the top. So we're looking to be a buyer, and guess what? Around the 79 fib retracement level. Okay, we're using that 62 to 79 area, and it also just happens to be previous resistance levels, and I'm not being exact on that particular false break, but we can just move that even down a little bit. I know Duncan would be very keen for me to get it exact, but for the purposes of isolating the level, you can see price literally has gone down there, tag that area, and then since then it's moved up about 92 pips off that level. So if I'm zooming in for a trade on that particular level, and I'll just do that now to give you an idea, you can see how that actually looks. I'll get rid of the support levels, but you can see down here as price rallies back up, we could start to see setups occur as it puts in these higher bottoms. Okay, so that gives you an idea of where you isolate the level and then go in for the trigger. Let's put it back on a daily, and we'll actually mark in the precise nature of it there, okay? So 15 minutes, you'll see what happens. Once you get price fail below very briefly, and you may have found that lots of stops might have got triggered down around this level, and then it puts in this higher bottom, and of course we get a break up from there. So whatever trigger you're using, it isolates the level and allows us to look at that. Let's go across to say the euro. So let's have a look at the euro dollar. All right, this is one that we've already put in, but I'll do it for you again. Euro dollar at present is certainly putting in higher tops and certainly putting in higher bottoms. So the trend is up. So we're looking for a significant pullback. And we could say, see the 62 level here. Now remember, it's not all, going to line up perfectly, okay? But you see the 62 to 79 level. For me, I'm seeing also some previous resistance around here. So this area here is probably a level where I'm going to keep an eye on to see if I could get a further retracement back to that area and then zoom in and look for a potential trade at that level. I mean, could you buy here? Remember, folks, it may not get back there, okay, at this stage. So what we're doing is going into the market and we're looking to mark in areas for multiple reasons and then look for a trade to take. And keep in mind, you don't have to wait for a particular trigger. You could literally trade the level, say, with a 100 pip stop. I know Duncan goes through and does those webinars as a really simple approach from trading the level. So let's keep an eye on that euro dollar. Now, if we're going to go the other side of it, so let's jump over to gold. So looking at gold at the moment, I think you can see what I'm doing here. I'm literally saying it's in an uptrend. I've drawn in the fib level, and again, the 62 retracement level comes in. I'm just going to mark this in for this resistance area. Could it become support? And it would also be a 62 fib retracement. And I've had so many times, if we look at other previous examples, so many times where gold takes off and people say, oh, you've missed the boat, it's never going to pull back, okay, you're going to miss out. And then if I just draw in, say, from this bottom up to the top, you'll see it literally comes all the way down to around that 79 previous resistance acting as support. And then we get a move higher. Now, keep in mind, we're just looking for trading opportunities here. We're not necessarily suggesting that it's then going to go through to all-time highs, because the reality is, folks, we just don't know. We don't have that crystal ball. So it could very well be that it mightn't make all the way to the 62, and we might use this resistance level acting as support, and that's the 50. Okay, either way, what we're saying is I want to trade in line with the trend, and I want to isolate a level. In this case, it's a 50% retracement. The deeper the better in my view, 62, even 79. However, it may not pull back that far, okay? So that's why I think it's important to isolate the level rather than, for multiple reasons, rather than just dive in. Let's go have a look. See, let's look at some that don't really add up. So let's go to Euro Yen. And we'll go to a daily. And I look at this Euro Yen at the moment, and you can see it's very much like the Aussie Yen, where it's very similar, isn't it? So let me just draw in that one as well. Now at this stage, despite the intervention, the trend is still up. Okay, so we're using previous resistance starting to act as support. However, price did, drop below quite substantially. So you may potentially, based on your risk, have been stopped out. But if you put it below the previous resistance level and you're risking, in this case, about 100 pips, then you're still going to be in this trade, okay, at this point. So that's where it comes into a really simplistic but multiple purpose use. Now let's have a look on the short side. So I think New Zealand dollar. So you start to get the idea is we're seeing on the daily, it's actually putting in lower top and definitely lower bottom. Okay, so the trend is down. So therefore I would use this most recent move and we just do it in reverse. I would say right here, remember, we've got to assume that this is currently the bottom. That may change. But if I have a look, the 62 level rallies back up to previous floors maybe acting as a roof. So I'd just use it in this regard. Okay, so you start to see there's some floors here where support came in. Is that going to, in a downtrend, act as resistance? Okay, so that in effect, folks, is how we just look at the levels and put them together. From there, we're just using our triggers to enter, which can just be your 15-minute change of direction, trendline break, MACD cross, and then deciding your risk level and your reward. And folks, you've got a very simplistic strategy today where you can move through and look at levels you might be interested in trading at. And once price gets there, you can either create an alert. Okay, you can create an alert where it will alert you when price is at that level, or you could just automatically trigger in, or you could just come back and have a look at your chart every few hours and check in. In my case, it's generally about 4 in the afternoon, 5 in the afternoon Sydney time, where price is near them. I'll have a look around the Frankfurt London Open. All right, folks, that is putting your levels all together. Good luck with your trading. And remember, folks, if you've got questions about this particular strategy, feel free to contact me. But remember, Duncan Cooper, our senior market strategist, this is a very simplistic approach. He will do the analysis for you 3 nights a week here in Sydney time, and he would be happy to answer questions and isolate that levels. I will also be putting these up on our Telegram moving forward for this particular strategy. So that is the 5 essential things I think you need to know when you're getting into trading. Have a great day, everybody.